All right, so the CPI literally just came out. I'm going to be going through the CPI afterwards. I'm going to be going through the news as well. Okay, so I'm going to just mix them all into this one video. If you're interested, just stay all the way to the end. All right, so anyway, we come up with the CPI coming up superbly high, way higher than what we expected. Okay, right now, month over month, it's up by 1%. Okay, we were previously expecting about 0.6% or so, but it went up by 1%. Okay, so this is definitely something that's going to be very, very worrying. Okay, first up, we have to look at shelter, gasoline, and food being the largest contributor. Okay, of course, in my video, I said that it's not going to be that much. I think it's going to be gasoline, food, and airline fares. Okay, these are the three things that I think would be going up the most. I'm not sure why they put it as shelter, because afterwards you can actually look at the actual report. So I'm going to go through the whole report with you guys. Okay, so simply said, you can see the 1 month change in the CPI minus U, which is basically how you see the urban one. Okay, last month it was 0.3. This month we got 1%. Okay, definitely very, very bad. Okay, let's look at the entire percentage change in terms of the whole in the summarized chart. Okay, in May, the big ones that we have to look out for: fuel up by 16.9%. Crazy amount again. Okay, and then in energy, in your utility up 8%. Okay, but we expected utility to be going up as well. That was in the yesterday's news as well. Okay, then now you actually head over to food. Okay, food went up by 1.2% in May. Okay, cereal, bakery products up by 1.5%. Food away from home up by 0.7%. Okay, and then for the food at home index rose 11.9% over the last 12 months. This is huge. Okay, energy expected. We have already seen energy prices continuously going up. We kind of expected that. Of course, the embargo on the European Union, that has not really come in yet. So we are expecting even more persisting oil prices to be even for the June report as well, which is the next month. That's going to be another huge thing that we have to look out for as well. Okay. So over here, you can see all items, less food and energy, is up about 0.6% in May. Not exactly the number that we are looking for. We're looking for somewhere in the 0.2 to even 0.4%. Nothing more than 0.4%, honestly speaking. So right now we are all the way at 0.6%. So definitely something very, very worrying. Okay, now we want to go into the intricacy of things. Okay, before we actually get there, let me just give you guys an update on the SPY. The SPY is down 1%. The next Nasdaq is down 1.3% in the pre-market. So of course, people are not taking this report very, very well. But like I said before, I do think that there's going to be some form of a buyback coming in, because I don't think that this CPI is going to be affecting that much. We just needed the information for this entire report, because we needed this information for us to know what to do next. But the VIX is definitely up. The VIX is currently at 26 points. So yeah, definitely a little bit worrying for the market in later on. I think right now the futures is most likely going to be in shambles. So later on in the open market is going to be way more interesting for us to really look into. All right, anyway, let's look over in the April to May. Okay, the unadjusted percentage change over here. Okay, where my cursor is at. All right, let's go through the thing. 2.6% up at dairy and related products. Cool. 16% on the fuel, the whole energy sector. Let's skip that. All right, other than that, you can look at this: apparel, new vehicles, used truck, everything kind of doing 0.3, 0.7, 0.9%, that kind of thing. I feel that's still all right. Okay. 1.5 on the transportation services. Later, we'll be going through more on that. All right. And then below, airline fares. Airline fares is still at 16.1. That's going to be the huge one that we have to really look into. Okay. Because we are expecting airline fares to kind of just get waved off. And even for myself, I did say that airline fares is going to be a little bit more persistent as compared to the others. Especially, I gave out 2 reasons yesterday as well. Airline fares is going to be persisting simply due to the fact that the world is recovering, the economy is recovering. Everyone wants to travel, be it your business trip, your leisure trip, your vacation, whatever it is. Secondly, is because of fuel prices. If fuel prices continue to persist, okay, those airlines need to definitely increase their price in order for them to fly. basically. So yeah, airline fares are also going up as well, 16.1%. This is huge, okay? Like, you have to understand that this is a huge increase for airline fares. All right, now we get into these smaller intricacy of all the things. You have 2.1, which is your flour and prepared flour mix. 4% on cookies. We got 3% on breakfast sausages, 3% on poultry, 2.7% on chickens, 4.4% on other uncooked poultry, including turkey, 5% on eggs. Oh my god! Just look at this, okay? May 2021 to May 2022, okay? Eggs went up by 32%. 32%. This is huge inflation. This is huge inflation. This is why people are so worried. On this column, you're looking at year over year. Year over year, you're looking at like 13%, 12%, 14%, and 32% on eggs. It's just, gosh, man, this is huge. This is, just a hyperinflated economy right now. So, dairy and related products, milk is up. Fresh whole milk is up. Let's see, do we have anything crazy? Canned food is up 3.8. We have butter margarine up 3.2. Peanut butter is up 3.3. Do we have anything that's incredible? Okay, fuel up 11.3% on the fuel oil, 16.9% actually. And not propane, kerosene, and firewood is not really going down either. Everything else is basically up. Clocks, lamps, and decorator items, like I said before, it will be going down. Okay, this is kind of interesting as well. Let's go through this a little bit as well. Okay, furniture's down. Bedroom furniture's up a little bit. No, bedroom furnitures are down as well. Living room, kitchen, and dining room furnitures are up by 0.7%. Other furniture's down. Appliances down. Major appliances down. Laundry equipment down. And like I said before, I think this is huge. This is a clear indicator that the real estate market is definitely in some form of a danger, because we're going through a hyperinflated economy, and prices of furnitures, prices of equipments, prices of your beddings, your linens, your coverings, things of that nature, all of them are dropping in price. Okay, and in a hyperinflated economy, it simply means that people are not having as much demand as they used to. Okay, so this is something that we really have to look into as well. Okay, you heard it here first. Some crash is going to be coming for the real estate market. Okay. Over here, let's continue. Okay. Yeah, honestly speaking, everything that's a minus are all the household items. Okay, you don't really see much of the others. Okay, men's shirts, sweaters, all of them are going down as well. I think apparels in general are going down because people are just saying, like, you know what, inflation is going crazy. I'm not going to spend money on a new suit. I'm not going to spend money on a new dress. Let's see, nothing crazy on this side. Vehicle accessories other than tires up 2.3%. Oh yeah, then everything else. Okay, college textbook is up 2.5%. Why? Okay. Smartphone is down 5%. Okay, honestly speaking, I don't think smartphone is going down 5% is gonna stay here for a long time. I do think that that's going to kind of just dissipate over time, simply because rising costs of raw materials, even Apple is talking about inflationary pressures as well. I don't think this is going to be staying here for long. Okay, so next up, public transportation up 11.2%, airline fares up 16.1%, ship fare down almost 1%. I think that's about all the report. Everything else is kind of just basically it. This is quite a horrible CPI, but honestly, everything that I said was kind of true to a certain extent. I didn't expect shelter to really go up that much, but everything else kind of basically went according to what I said. Your food is going to go up in price, your gas is going to go up in price, your airlines is going to go up in price. Everything in your household, down to your furniture, your linen, your beddings, your coverings, your windows, everything, all those are going to go down. Okay, everything's still according to what I actually expected of this. So because of this being kind of what I expected of this CPI, I do think that I don't think the market is going to really crash on this sort of day. So yeah, we kind of have to see how it actually goes. I'm actually quite excited to really see how this actually plays out. But yeah, as of now, like I said before, I do think this is still somewhat according to what I expect. So cool. All right. Anyway, let's see if we have any other news from the Wall Street Journal. All right, let's cover some news today. US inflation hit 8.6% in May. Soaring costs for energy and food are keeping price growth near a 40-year high. Okay, the high inflation is a downside of strong US growth, fueled in part by low interest rates and government stimulus to counter the COVID-19 pandemic impact. Of course, economies and policymakers are watching closely for signs that inflationary pressures are ebbing. The continued rapid pace of price increases add pressure on the Fed to raise rates aggressively to tame inflation. We already know energy price rose in May because of the invasion of Ukraine. And of course, with the average gallon of regular unleaded, currently going for $4.97 according to the AAA. The strength in energy prices rises will keep putting upward pressure on inflation. Of course, we already expected that. Okay, consumer grocery bills have risen by an annual rate of more than 10% since earlier this year, a pace last seen in the early 1980s. Food prices are up broadly, unlike early in the pandemic when meat prices drove much of the increase. It's not just weather, it's disease affecting citrus trees and chickens, it's the Ukraine conflict. So yeah, you know how one Ukraine conflict can cause food shortages across the globe. And of course, with rising commodities prices and rising raw material prices as well. Okay, this is all it is needed from just one country invading another. Absolutely crazy. All right, anyway, let's move on to the next news. I don't think there's a lot of news today, so that's fine. Rapid pace of US inflation held steady in May. Economists estimate this was actually opened up before the CPI actually come out, so I don't think we need to read that. All right, next up, we got business losses from Russia tops $59 billion as sanction hit. Nearly 1,000 Western companies plan to leave the country or cut back operations with more write-down expected. Global companies have racked up more than $59 billion in losses from their Russian operations, with more financial pains to come as sanctions hit the economy and sales and shutdown continues. Okay, so I think that this kind of also includes your Starbucks, your McDonald's, all the other franchises that's actually leaving Russia, and all those businesses who are still in Russia and being affected by their businesses. So at $59 billion, I don't think that's a small figure for us to really look away from. So yeah, definitely this whole Russian-Ukraine thing is causing a lot of trouble. All right, now, talking about trouble, Shanghai is returning to lockdown for mass testing on COVID fears. This is so dumb. This is so dumb. I'm actually lost for words over here. Shanghai will briefly lock down most of the city this weekend for mass testing as COVID-19 cases continue to emerge, causing more disruption and triggering a renewed run on groceries days after exiting a grueling 2-month shutdown. The plan emerged from one area with a handful of cases that spread in hour to 15 of the financial hub's 16 districts. It encompasses almost all of the city's 25 million residents as health officials use testing to root out any silent transmission of the virus. The quick escalation reflects the worry that continues to shroud Shanghai, which implemented one of the world's strictest lockdown in late March after the sluggish initial response to its outbreak. The newest move follows a rebound in infection within the community to 6 on both Thursday and Friday, up from 0 a day earlier. Residents will be released after taking the test, but they'll be back under lockdown if new infections are found in their compound. Hey, you know, it is what it is. It is what it is. China likes to do this sort of thing. I don't know. Honestly, right now, because China is thinking that it's going to be just a weekend of lockdown in order for them to actually just get all the cases down again. What I'm afraid of is that during this weekend, when they're trying to handle the whole entire lockdown and such, while people are rushing out for groceries, rushing out for supplies, rushing out for whatever it is, okay, for their final hours of fun before going back for the weekend to kind of just get the whole lockdown in track. What happens if more cases actually emerges Right now they're just they're shutting down the entire Shanghai because of 6 cases. Okay, what if it turns out to be 40 cases or 60 cases? Are they going to prolong this entire shutdown again? And that's my concern, because if that would be happening, Shanghai is going to be effectively just locked down forever. Because whenever a new case come out, they're just gonna keep on doing this whole entire cycle. That's my concern. So I'm not sure what they are trying to do. I'm really just very, very confused. So yeah, definitely trouble for the market. Okay, definitely trouble for the market. Federal Reserve dot plot seen signaling rise in median rate to 3.1% in 2023. This is the FOMC, the policymakers are likely to signal a continuing shift to a more hawkish policy, fighting inflation with interest rate climbing above 3% in 2023. So this is according to a news survey. The FOMC will raise rate by 50 basis points next week and by the same amount in July, but then slow the pace of tightening to 25 basis point increment from September. This is according to the survey. Okay, do understand that this is according to the survey. Ultimately, it could easily be 50 basis point for the next 3, 4, 5 cycle. We do not know. But anyway, in July, in June, which is this month, we're going to be getting the SEP. And in the SEP, we'll be able to see what is the interest rate, what is the medium rate that the FOMC board members actually think we should be by 2023. So yeah, anyway, the last news. Buy now, pay later firms were already in trouble. Apple just gave them one more thing to worry about. Honestly, buy now, pay later, as all these companies buy now, pay later. I think, of course, when you talk about layaway model, you think about Affirm, you think about Klarna, you think about PayPal, all these companies. Is Klarna listed though? I can't remember, but yeah. So yeah, anyway, the iPhone maker now plans to launch Apple Pay Later, which honestly speaking, I don't know. I don't think that this was exactly like, out of the blue. I don't think this is shocking or anything. You kind of expected it. Okay. When Apple did an Apple Pay, it kind of just come very, very normally for us to expect an Apple Pay Later. I don't think it was a huge bridge for us to actually get through either. I think that it was a very easy transition for us to actually get there. This puts buy now, pay later players like PayPal, Affirm, and Klarna, in an awkward spot. Of course, because I don't think, PayPal aside, I don't think Affirm and Klarna is going to be fighting Apple layaway model. Okay, and of course, people are going to argue, because if you're into Affirm, Affirm's buy now, pay later platform is actually quite good. You can actually spread out, I think, to 16 months. Okay, so pretty solid for people who really want to continue paying their debt in such a long period of time. And I don't think Apple is going to be allowing that a long duration for you to do the payout. So that's one of the worry that people probably would have. And that's also one of the reasons why Affirm is like saying, we're not worried. If anything, this is going to be bringing more eyes on this layaway model that we have. Okay. But let's be honest here, I don't think this is something that really needs introduction. This has already been here since the start of time. It's basically just installment payment. You have it in your mortgages, you have it for your car loans, you have it for a lot of things. Okay, I don't think this actually needs introduction to begin with. So yeah, Apple is doing it. So yeah, I guess. Honestly, there's nothing much in this article other than the fact that, Apple is moving into the buy now, pay later space, raising the stakes for the fintech companies that pioneered the trend. I don't think there's much. So yeah, it's just going to be launching its own pay later loans on Monday, expanding an array of financial services products, which already includes mobile payment and credit cards. Apple Pay Later, the service will allow users to pay for things over 4 equal installments paid monthly without interest. So yeah, pretty good. I'm all for it. I love the whole buy now, pay later sphere of it. I love that I don't have to pay everything at once, and as long as it's zero interest and you can kind of break out your payments, I'm all for it. But anyway, that's all I have for this video. Thank you so much for watching. And yeah, I think that that's all I have for today. The CPI and also the news. Thank you guys so much for watching, and I'll see you guys tomorrow.